Welcome to third video or part 3 of the video. Here we will be discussing about US 10-year treasury yield, then we will be discussing Brent and NYMEX. I have told many times Brent and NYMEX, the movement are identical and similar. Hence first we will cover US 10-year treasury yield before we go into Brent and NYMEX. US 10-year treasury yield closed at 4.308, around 5.7% up this week and 11% up this month till now. Right? In this month 1.3% up. Last week if you recollect, I had said that though it formed a solid red candle, I had categorically stated that the 50-week simple moving average is going to act as a very good support, which it did, and from there it did a solid bounce, forming a rising three methods or a short covering candle, and hence from now on the 50-week simple moving average and 50-week exponential moving average both will act as an excellent support for US 10-year treasury yield. And in the monthly, last week when we saw the monthly candle, it was forming a red candle, but now it has formed a spinning top or a hanging man type candle, but it cannot be called as a hanging man because the trend has just begun, but with a long lower wick. Normally it is of a continuation pattern. So hence what is important here is that the exponential moving averages, it came below that, but in the monthly chart it bounced off nicely. And in the daily chart last week, if you recollect, it was below the 100, 50, 100, everything it was below. Now it has decisively taken. I am using the word decisively because it has gone up. Of course, Monday we can have some pullback, but notwithstanding that, the 200-day is going to act as a very good support, below which is the 150 day simple moving averages. Hence, it's on a good uptrend. So here's 10-year treasury is on a good uptrend. Next is Brent and NYMEX. Brent and NYMEX, first the levels, then we go into the discussion part of it. Brent closed at 85.34, 4% up this week. NYMEX closed at 81.04, around 4%, 3.9% up this week. Overall, they are up around 10 and 13% respectively in this year, and up 4.2 and 3.6% in this month. So overall, if you recollect, I would request people to see my videos, last 20, 23 videos and many of my weekly videos, where we had said that Brent and NYMEX, the level of 100-week simple moving average, it was taking support, from there it bounced. We had said that will act as a very good support, will not break below that. Last week's red candle was more of a continuation pattern. It continued by forming a very big green candle in this week, by forming an engulf candle, and in fact in the weekly chart it is now touching the upper band. The only resistance it is having is the 100-week simple moving average. So 100-week simple moving average. What I said was the support was 100-month simple moving average. Sorry, now it is now near the 100-week simple moving average. So that is acting as a very, very that's the last level of defense available for bears. Otherwise, it is on a good upswing. Both Brent and NYMEX similar candle. In the monthly chart, it has now taken above the exponential moving averages, and I expect this month to close powerfully. In the daily chart, it is on a significant up move, rising above the Bollinger upper band, and it is above all the simple moving averages and all the exponential moving averages. So hence, my concern is if Brent and NYMEX breaks through these levels, then you can have a significant up move, even it might touch 100, which is a cause for concern, but that is what the reality is there. Which is why if you see now what is happening, US 10-year treasury yield has gone up in this week, and dollar index has gone up, this commodities has gone up. These are all resulting in risk off trades, which is why the exuberance that we saw in Bitcoin, after which it has fallen significantly, around 6,000 points it has fallen, Bitcoin has fallen. So hence what we expect is that US 10-year treasury yield and dollar index are in a good up move along with Brent and NYMEX. The Brent and NYMEX up move is not good for oil importing countries like India. Thank you very much.